Welcome to the daily insights that matter. Now, macroeconomic headwinds can significantly impact the growth projections made by global and the domestic rating agencies. Now, this was evident in the case of Fitch Ratings, which made revisions to India's growth forecast. In the month of March, Fitch had downgraded its forecast for India's GDP growth in the fiscal year of FY24 from 6.2% to 6% due to several changes including elevated inflation and interest rate risks as well as the subdued global demand. However, yesterday, Fitch Rating revised its estimate for India's economic growth in FY24 upward by 30 basis points to 6.3%. Now, this adjustment was based on a stronger economic performance in the month of March or in the quarter of March for the fiscal year ended FY23 and a positive momentum in the near term. Now, it is important to note that Fitch also acknowledged the potential risks associated with the slowdown in the global trade, which could have a downward impact on India's growth. Now, Fitch highlighted the recovery in India's manufacturing sector during the March quarter following two consecutive quarterly contractions. The construction and agricultural sectors also experienced a boost, contributing to the overall GDP growth. It also said that domestic demand and a favorable net trade balance were the key drivers of economic growth. Furthermore, Fitch observed a moderation in the inflation in recent months and a pickup in the domestic economy. However, it also mentioned that the monsoon and the potential impact of the El Nino could pose near-term upward risks to the economy. On a global scale, Fitch revised its global growth projections for 2023 from 2% to 2.4%, stating that the world economic activity was performing better than expected. Now, this positive outlook for the global economy could have implications for India's growth as well. Fitch's decision to raise India's GDP forecast to 6.3% for the current fiscal year from 6% is a positive development. However, it is essential to remain cautious about potential economic challenges in the near term. Despite these challenges, India is expected to maintain its position as the fastest growing major economy in the world, demonstrating high resilience. Now, the Prime Minister Modi's visit to the United States has ushered in a series of groundbreaking developments, with several American companies demonstrating a keen interest of investing in India. Now, India has attracted the attention of two highly acclaimed semiconductor manufacturing companies with significant investment plans in the pipeline. Micron Technology, in particular, has declared its intention to establish a groundbreaking semiconductor testing and assembly facility in India, which will be the first of its kind in the country. Now, the initial phase of this ambitious project involves the construction of a 5 lakh square feet assembly unit in Sanand in Gujarat. Notably, the government will extend the PLI or the Production Linked Incentive Scheme amounting to 11,000 crores or $1.37 billion to support the development of this semiconductor plant. On the other hand, Applied Materials, another semiconductor company, has announced a $400 million investment to build an engineering center in Bangalore. This investment will spread over 4 years in the engineering sector, which will be used to developing and commercializing the semiconductor manufacturing equipment unit. Now, these recent advancements represent a significant achievement in India's journey towards becoming a prominent player in the semiconductor industry. Alongside the establishment of two semiconductor companies, various notable US companies including Tesla and General Electric have announced their strategic investments in India. Now, this development not only brings advantages to the US companies involved, but also contributes to India's overall economic growth and development. Now, the positive outcomes include the creation of jobs, technology transfer, increased exports, foreign exchange earnings, and a multiplier effect on the economy. Ultimately, these developments align with India's goal of establishing itself as a thriving manufacturing hub, further strengthening the Make in India program. With that, this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com